Good morning, Bitcoin. Today is Wednesday, December 13th, 2017. My name is Thomas Hunt, and here's what's happening today in Bitcoin. The price of Bitcoin was down 0.92% in the last 24 hours, with a last of 16,894, a high of 17,383, and a low of 16,352. That's $1 for 5,968 Satoshis. Kind of going the other direction there, closer to 6,000 than we are to 5,000. The SEC has issued yet another statement on cryptocurrencies and initial coin offerings. SEC Chairman Jay Clayton personalized the statement, declaring that this time it's different. But it's not. The SEC statement is basically a list of investment guidelines for ICOs. They warn you if it's too good to be true, don't buy it. If the offering doesn't seem legal, don't buy it. They warn people who are selling it not to sell it in a way that you're selling securities, not to sell it on a marketplace, not to, he says, on this and other points where application of expertise and judgment is expected, I believe that gatekeepers and others, including securities lawyers, accountants, and consultants, need to focus on their responsibilities. This is a clear sign from the SEC that there's not going to be any ICO regulation for at least the next 2 years. They are way behind on this. They have no idea what's going on out there, and they're in complete denial if they think the so-called gatekeepers, such as security lawyers, accountants, and consultants, all of whom are being paid handsomely by these projects, are going to blow the whistle and explain how bad they are. They also warn you that selling securities generally requires a license, and if they don't have a license, excessive touting in thinly traded and volatile markets can be an indicator of scalping, pump and dump, other manipulations and frauds, of which the SEC seems to be taking no action to stop. Unbelievable announcement from the SEC. So, in conclusion, the SEC is committed to promoting capital formation. Whether it's in the scammers' bank accounts or the hackers or whoever it is, they're promoting it. So interesting take from the SEC. Very much a statement, not a warning, and very much not regulation or plans of future regulation or any kind of lofty-esque desire to get regulation going faster. It's a big non-statement from the SEC. Higher margins set for CME soon to launch Bitcoin futures. The CME Bitcoin futures are announcing, and they're saying that it's going to cost more to short Bitcoin than it is to long Bitcoin. This is a good sign for people who are long Bitcoin. And it's also worth noting that the CME futures exchange is much larger than the CBOE, which launched earlier this week. So if we saw a good effect of 20% up from the CBOE, we might even see a larger jump from the CME futures. Then again, this could be the chance for Wall Street to finally short Bitcoin into the ground, which would be a very dangerous thing, given that you don't know how much demand is out there. I would speculate that there's a great deal of demand out there for Bitcoin, likely able to buy up whatever they can short. South Korea considering steps to rein in the Bitcoin frenzy. South Korea has taken regulatory actions on their exchanges and seen the premium for South Korean exchanges fall from 30% to 5%. Yow. But this continues in the rollout of Bitcoin regulation. Earlier we saw Japan regulate Bitcoin. Then they had a huge boom and a takeoff in their markets, both in retail usage and in investment. We'd likely see the same thing in South Korea, although there is a bit of a mania going on in South Korea right now, and regulation might help rein in that mania. Of course, it might also have the opposite effect, spreading the word about Bitcoin and telling tens of thousands of more people who hadn't heard about it and hadn't gotten it yet that it's time to get in. Just going to read this from Russ Harvin. Wow. New Jeff Garza Bitcoin fork set up to steal Satoshi's inactive coins and give them to other projects like Ethereum. And it's really hard to believe, but according to the white paper, I presume, for Jeff Garza's new project, quote unquote, United Bitcoin, it seems I was just campaigning for something like Bitcoin United not too long ago. as we were fighting the forks. As it says here directly from the paper, inactive balances, I don't know how you determine that a Bitcoin balance is inactive rather than a person just holding their money, but they will be transferred to multi-signature wallets controlled by the UB Foundation. As you can see here, inactive Bitcoins forked to United Bitcoin and transferred to credit account through chains. 30% will be allotted to 10 other blockchains, such as Ethereum, based on technical evaluation and community contribution. 70% will be reserved as collateral back to the issuance of digital currencies pegged to fiat currencies for global circulation. Stunning work from Jeff Garza. Certainly the Satoshi coins are just sitting there. Certainly if you forked Bitcoin, you could just reset all the keys to those coins to your key, take the money on your new fork, not on the original fork. And it's well within his power and rights to do this, but it's a shocking move from Jeff Garza. Finally, Bitcoin bulls face alt competition in the push to 20K. We've got more trading advice from Omkar Godpool from Coinbase, saying that Bitcoin is still in the hunt for 20,000, but bulls need progress soon, or a minor pullback could be in the offering. We can see here that we're clearly trading above the 50-day moving average, which is very strong, but there's a bull flag breakout followed by a nice rising low pattern represented by the ascending trend line. His view is that Bitcoin could cut through the resistance at 17,500 and make a move towards the 18,300, 18,500 level in the next 24 hours. Overall, the cryptocurrency looks set to test the major psychological level of $20,000. As noted today, only 2 end-of-day closes below 14,000 would abort the bullish view on these charts. So keep an eye on those charts. If Bitcoin closes below 14,000, we'll be going bearish. If we close above 17,500, we may make a move to 18,300 or even the coveted $20,000. New York Times, I was wrong about Bitcoin. Here's why. Basically, the New York Times author had to admit that he had no sense of vision. He didn't understand the difference between the present and the future. When he bought a Bitcoin in 2013, he wasn't impressed by it. He sold his Bitcoin a week later for a small loss. I know when I bought a Bitcoin in 2013, I was really impressed by it. I was really impressed by all the places I could send it and what I could do with it, splitting it up into amounts, putting up a QR code on the screen for a YouTube show. These are ideas that I thought instantly showed the value of this currency. The fact that you could put up a QR code and take donations from anyone, anywhere in the world, even just a couple of dollars. It's a little harder these days with the transaction fees, but still, you get my point. The Bitcoin dream is all but dead, the overdramatic author wrote in 2013. And boy, are they kicking themselves now. The Bitcoin they sold for $140 would be worth more than $15,000 because you have a lack of vision. Not any of the reasons that you think that you're wrong, because you have a lack of vision. Bitcoin has gone mainstream. That's a big deal. Great article from Michael J. Casey, one of the authors of The Age of Cryptocurrency, where he tongue-in-cheek mentions that we are entering the age of cryptocurrency. His 8th grader came home saying that all the boys at school were talking about Bitcoin. Of course, Casey has to needle the fledgling cryptocurrency, saying that it could be an ominous recreation of 1929 when the shoe shine boys started giving stock tips. But I don't think so. Stocks weren't just invented right then. This is a brand new asset class. As I saw Richard Hart say on Twitter a couple of days ago, this is the first time in 40 years since gold was added to the futures exchange that the futures exchanges have added a new commodity, a new asset class. Bitcoin is a wholly brand new thing. That's why when it spreads like a mania and it sticks and it stays and it S-curves instead of bubbling, you'll know that you're involved in a wholly new thing that's just trying to understand its price and find its place in the world. Quote from Arianna Simpson on Twitter. My favorite thing about crypto is that despite often being in a financial position to retire, the makers keep making and the builders keep building. They're not in it for the money. And that's what I think a lot of people didn't understand about the Bitcoin fork. When Coinbase and the others were trying to get rid of the core development team, They were trying to get rid of the smartest volunteers that we have. To find someone intelligent who's willing to volunteer their time for the good of the community is so incredibly difficult these days. And to change the system into one where the CEO employs Bitcoin developers and those developers work for the CEO and they work for the company is a completely different shift. Bitcoin, the open source science project, exists, as Arianna says, because the smart people who got in early, who wrote the code, who continue to write the code, are interested in things other than money. And I know there's a whole stage of the audience that doesn't understand that because you're only interested in money. Even then, you don't know how to spend the money once you get it because you don't have other interests. But we need to remember that the programmers are like this. The programmers could buy any kind of new screen they want. They could go to Hawaii at any time, sit on a beach, read a book. But instead, they program Bitcoin because it's more interesting. Interest is above money for these people. And that's something you should think about too. It's better to be interested in things, to be interested in the world, than just to be interested in money. We've got a great cartoon from Bitcoin Gent. He says, what if Bitcoin isn't the bubble? It's the pin. And this ties a little into what I was talking about a couple of days ago when I told you again about the MP3 revolution and the video file revolution that came after it, as well as the internet revolution before that. Each one of these were met the same way. It's only for criminals, it's only for deviants. Then the technology spread to everyone, and everyone started using the internet. Everyone started using MP3s for their superior compression and file quality. And then everyone started downloading videos. And now everyone's cutting the cord on their cable boxes and everyone's switching to watching YouTube. And soon, everyone will switch to Bitcoin and sending around Bitcoin on the internet. Bitcoin won't be a bubble. It's the pin. And we've got an update in net neutrality news. Today, December 14th, is the battle for the internet. The FCC vote allowing your ISP to lock up huge parts of the internet behind caps and paywalls is tomorrow. Today is the last day to pressure Congress to stop this. Get your representatives' numbers at battleforthenet.com. Melt their phones. Edward Snowden. And once again, for those of you who don't understand, this is very similar to the hard fork situation. The internet is an open thing. All of the packets are treated equally. This way, if you start a new service that competes with an old service, if you start YouTube 2 or Facebook 2, you have an equal footing with the existing Facebook. You have an equal footing with the existing YouTube. If they get rid of the net neutrality rules, they will create a walled garden system where the existing YouTube is in the fast lane. And your YouTube 2, while it might be distributed, decentralized, torrented, censorship-free, free to use, take less cuts from the advertisements, it might be superior in every possible way. Your new website, your new invention will not be in the fast lane. You'll have to raise capital to burn money to get into the fast lane. And this changes the way that you can innovate on the internet. Right now, the internet is open for innovation. After this, it's closed, and these companies control it more and more. Additionally, these companies will be able to charge on both ends. They'll charge you for using the internet and for using expanded service, pay an extra $10 a month to get Netflix, pay an extra $10 a month to get Amazon, but they'll also charge these companies to get access to the fast lane. So they're going to be able to charge on both ends of the pipe, and they're going to be able to end innovation, guarantee their position. It's just a nightmare. It's a huge win for business and a huge loss for people. And I don't know about you, but I'm on the side of people. Join the online protest to stop the FCC at battleforthenet.com. Comcast, Verizon, and AT&T want to end net neutrality so they can control what we see and do online. They want to gut the FCC rules and then pass bad legislation that allows extra fees, throttling, and censorship. Only Congress can put a stop to this. Write Congress first, then call Congress, then break the internet. We're all teaming up together today. Everyone's transforming their websites. This is our one last chance to try to save the internet before it becomes a one-way, pathetic communication medium like radio and television before. And we've got a great example of gerrymandering. Some of you don't understand what gerrymandering is and why it's so important. It's a technical issue that rises above political issues. It doesn't matter if you're a Republican or a Democrat. Let's look at this map. As you can see, the Democratic votes have been all linked into county number 7 on this list. 78% to 20%, the Democrats won county with number 7. Now, if this had been a House election for 7 House seats, the Republicans would have gotten 6 House seats, and the Democrats would have gotten 1. As you can see from this map, the Democrats got more votes than the Republicans. But because of the way that the county-by-county system would work, and because of the way that the lines have been drawn, as you can see, this strange jutting formation here, this strange jutting formation here. These are this down here. These are to include cities into one large district, all Democrats in one district, then to have the rural areas cut up so that the Republicans can win more seats. This is undemocratic and needs to be stopped. It's our only hope right now that the Democrats will win the 2018 election, resulting in their control of the 2020 census. We then hope they would be better than the Republicans. It's also possible California has a panel of bipartisan appointees who vote on these districts. The Supreme Court could establish a standard for gerrymandering. They could establish a mathematical formula that you could use to find out if your district has been gerrymandered, and then they could have that be changed. Right now, they say that they don't have a way to control gerrymandering, but they are seeing several gerrymandering cases this quarter. And that's about it for the Today in Bitcoin show. I'd just like to ask everybody to give us a thumbs up and share so that more people can find the show. If it's your first time here, please subscribe down below. And if you've got any extra Bitcoin, maybe 10 or 20 bucks, you want to make a donation to the code on your screen, that would really help us cover expenses around here and keep these shows going. We do these shows every day, so be sure to check out tomorrow. And we've got check out the World Crypto Network for an interview with Andy Hoffman and Adam Meester. Happened right before this. I caught the end of it. It was a pretty cool interview. They were talking about different kinds of Bitcoin forks, giving you the scoop on B Diamond, B Gold, B Cash, Super Bitcoin. I don't know. There's a lot of these crazy forks these days, but we just keep holding on, seeing how it goes. So thanks so much for watching. Until next time, bye-bye.